Hello traders, hello everyone, my name is Grega Horvat and welcome to a new week ahead video. Blake is away, so I'm taking his stage and I will walk you through the charts and analysis based on Elliott wave theory. I know that there are a lot of fans of Elliott wave theory or technical analysis in general, so I hope that you will find this video useful. Now we will take a look at the Euro, Cable, Aussie, Dollar, CAD, crude oil, dollar, yen, gold, stocks, and New Zealand dollar. Now, firstly, on euro dollar, looking at the weekly picture here, well, we are somehow trapped in this range, but there's still a chance that we will actually continue higher towards 2018 highs before reaching a potential top of an ABC recovery. Now, what I assume it may happen is actually now we are in period of inflation, so when we will see central banks starting acting more aggressively, I think that that's when also could potentially see a turn on these markets, especially if Fed will start with tapering. But for now we are not there yet. I think that this could be still either in the middle of a triangle for wave X or, as I said, an ABC recovery. So looking at this second count of where we could see wave C moving back towards these 2018 highs, well, it could be ongoing impulse if we can stay, let's say, above 1.16 level. So as long as we are above that level, this could be a way for counter trend movement from start of the year. Okay, now what is probably the most important is on the short term charts we have this potentially 5 waves to the downside. Now market recently turned higher and closed the week out of this downward channel, so I think that there is room for some recovery in the near future. Now also let's take a look on cable. Now cable, as you know, has seen some positive momentum, and it could be due to this removed lockdowns on July 19, if I'm not wrong. And you also have this news that Boris Johnson could call an extra holiday if England wins the Euro 2020. So we will see if maybe this could have some positive impact on cable in the next few days. Overall, I think that structure is still looking corrective here and suggests more upside after completion. But for now, even if we are in a triangle or maybe in a deep ABC flat correction, well, in either case, these structures are incomplete. The only concern regarding pound is that there are still increasing COVID cases on a daily basis. So if they will remove lockdowns now, well, maybe there will be some bad consequences in already in August or September, when they will have to make new restrictions. So we will see if this will try to keep cable here in this big sideways range. Now let's take a look also on Aussie. Now Australian dollar, now technically I still think it's looking very nice here. Now firstly look at the monthly chart, where we are tracking these price structures when we have seen this very nice three-wave recovery after each recession. In 2000, then you have 2007, 2008 Great Recession, and now 2020 recession. So since then we have seen a very nice bounce, but if we compare the previous two cycles, well, it appears that we are in the middle of this recovery. So overall, I'm staying bullish on Aussie, but we have seen recently some pullbacks, which could be also due to these COVID cases keep increasing in Australia. So of course, market has come to the downside, but overall I think it's still a counter trend movement. So because we have a very strong structure based on past examples that suggests more upside on Aussie, well, I think that it's worth to keep an eye on each counter trend movement that is made by three waves. So this for now is a very nice ABC pullback. In fact, wave C has reached last week this equality level compared to wave A, so it's a perfect support, especially if we consider that we came and retested this September swing high. So I think it's very nice potential bullish structure. What I really love here on the 4-hour chart is that actually in this wave C we can count 5 sub waves. Okay, and always when you have 5 waves, you can expect that market will turn into a correction, at least into a correction, maybe even something more significant reversal. So for now, I think that this wave 5 could be bottoming and that we could rally. Now, if we can rally back towards 0.76 with 5 waves, meaning a very sharp move, not in 3 waves, then I think that much more upside here could be coming on ASI. Also, we had some bad data from China, but still ASI was able to stay strong. Also, as I said earlier, you have COVID cases keep increasing. So when you have currency still trying to find a support and stabilize despite bad data, well, then you know that there can be a very positive impact on the currency if there will be any positive news coming out in the next week, or if we consider the intermarket analysis. If you look at copper prices, keep in mind that there was a very nice pullback here, but it was in 7 swings that took us back into this triangle pivot point of this wave 4 of lesser degree. So since we have a very nice reversal back from that support and testing this trend line after we have seen this 7 swing drop, keep in mind that 7 swing is a number of corrective structures. Okay, so either you see a 3 or a 7 swing move, well, this can be seen as a counter trend movement, maybe already completed. And what I really love about this is that ASI is a little bit lower. Okay, you have copper that is already trying to build a base, and if copper prices will be able to break this trend line, then I think that more upside will be seen, and this could be a very positive for Australian dollar. Now let's take a look also on dollar CAD. Dollar CAD is currently trading to the upside, but it's, I believe, in a corrective movement. What we are seeing is still an incomplete ongoing bearish cycle, looking for a 5-wave drop to continue into this potential lower wave C. However, based on the short-term structures, I think that there can be a little bit of choppy price action, potentially with a stronger CAD after better than expected employment figures released on Friday. So that's the reason why actually dollar CAD has turned lower, and I was looking for potential limited upside here because the rise was in 3 waves. Well, and this 3-wave structure normally suggests that it's part of a higher degree correction. So I think this still can be ongoing wave B, and eventually we could see more upside here on dollar CAD after any big dip to make this wave 4 a little bit more complex, maybe with a retracement back to retest these April swing highs. And of course, dollar CAD could potentially see more upside after this dip that is now underway if crude oil will continue lower. We have seen some very strong drop or reversal, I should say, on crude oil last week after no agreement from OPEC. However, we have this speculation that undisciplined OPEC members may actually abandon the production and raise the output on their own. And if that's going to be the case, then you know that crude oil could see limited upside. Okay, this could be very bearish for oil, especially if we also consider that in September, October, we may see a new lockdown, and when you have a lot of oil on the markets, but potential new lockdowns will occur after summer, well, this could be very bearish for oil. Not only that, we have this currently prices are trading close to this 2008 swing high. So it can be a very nice and strong resistance. You also have on this monthly 200 moving average up there. So I would not be surprised to see a potential slowdown with all of that data. Also, you have this 5-wave movement away from last year, last year April lows. So 5 waves up into this nice resistance, no agreement from OPEC, and potential new lockdowns after summer because of COVID could limit the upside here on crude oil. Now, what I'm saying or referring to is a potential new 3-wave setback, but after a completion of this 5-wave rise. Keep in mind that we still haven't seen a retest of these 2018 highs, so maybe there will be coming in the next 2 weeks, let's say. Now, looking at the short-term charts here, since we are talking about this wave 5 should be made by 5 subwaves. So this was wave 1, wave 2, wave 3. Now maybe wave 4 on the way. Very nice support is around $69 to $70 per barrel, where you also have this trend line connected all the way back from April lows of last year. So as long as this trend line holds, of course, trend is bullish, but keep in mind that we could be in final stages of this 5-wave recovery, so be aware of potential 3-wave setback. Now let's take a look also on dollar yen. Now dollar yen is coming to the upside, and I think it's now actually hitting a very strong resistance. Why? Because we can count 5 waves up from start of the year. Okay, and more importantly, we are seeing current reversal quite strong compared to previous very slow rise, as you can see. But despite higher prices. Okay, so actually this suggests that bulls were here, but they were losing momentum and strength. So that's why I'm not surprised by a very sharp reversal. Notice that this was much slower move compared to the previous very sharp one. So normally that's the perfect textbook structure of a 5-wave advance, where you have 5th wave much slower compared to wave 3. And this current reversal, in fact, looking at the 4-hour chart here, looks very strong. It came also out of this ending diagonal, I believe. Okay, so this appears to be like an impulse, so be aware of more weakness. 110.60, 111, that's ideal resistance from where I would be looking for a new sell-off while the market is trading above the recent peak. Now, there's also an alternate scenario. So my primary is that we'll see at least 3-wave drop back to this wave 4 swing lows, or an alternate scenario where you have this rise seen as a wave B that belongs to a flat correction. But even this one suggests that we will see more weakness, but maybe just more sharper one for a wave C that should be made by 5 subwaves. Now let's take a look also on gold real quick. Now gold is sideways, and what is probably the most important for me is that you have from all-time highs to this 1670 area, you have an overlapping drop. So always when you have an overlapping drop, and if you cannot count it in 5 waves, well, that's important indication that market is making only a pause with an ongoing uptrend. So in my opinion, this was either a completed wave 4 down here, okay, or it's part of a complex correction. Now for now I'm tracking part of a complex correction seen as as a triangle ABCDE pattern, or maybe a deep flat correction if we will see a break of this 2019 trendline support. But in either case, I think that this is a corrective pause. Now looking at the weekly chart, this is even better shown here, where you have this wave 1, wave 2, nice 5 subwaves within strong wave 3, now typical wave 4 pullback, which was not back to the area or back to the ending point of a former wave 4, but the rather starting point of a former wave 4, which is very common when you have 5th wave looking quite strong and extended and not wave 3, which is usually the case. So that's why I believe that this support could already be a very strong one and could limit the weakness here on gold. So I'm still favoring the idea that this is a triangle, but even triangle is incomplete. However, on the short-term basis, we have some encouraging price action for the bullish case. Since market completed this 5-wave drop here, it reversed quite nicely to the upside in impulsive fashion if you will check the lower time frames. So I think that this is either wave 1 or wave A, and you have now a corrective pose for a wave B. So I'm looking for more upside here into wave C in the next week, while the market is trading above that level. Now let's take a look real quick on the S&P 500. Now the S&P 500 is very bullish. We are seeing a very aggressive break out of this upward channel. So looks like the fifth wave is taking the shape of mania cycle. However, it still should be made by 5 subwaves. So looking at the updated daily chart, this is wave 1, wave 2, and you now have this ongoing 5-wave advance for an extended wave 3. So obviously more upside after pullbacks. Now looking at Nasdaq real quick here as well on the short-term charts, I'm expecting more upside since we are tracking this extended wave 3. So just be aware of potential pullbacks and then even more weakness. Now Dow Jones is probably looking the best right now. I mean, you have a very clear 3-wave setback, while the current bounce is looking quite positive for this market, especially because recent intraday pullback was made by 3 waves. So I think that more upside is coming here. Now let's take a look on German DAX. German DAX is also bullish. Looking at the daily chart here, tracking an incomplete 5-wave advance or cycle if you want from this March last year lows. So looking currently at sub wave 4 with an extended wave 3. Let me make this visualization much better for you. So you're now in the wave 4, expecting more upside for into wave 5 or 3, but this wave 4 maybe still could be unfolding, maybe even as a triangle. So just be aware of potential support a little bit lower before this market could finally break higher. Now one currency that I'm tracking, which could be quite interesting if these stocks will stay in uptrend, and if dollar is now turning down from a resistance, is probably New Zealand dollar. Keep in mind that in New Zealand you have a very good COVID situation, and there was a speculation after recent confidence that investors are actually speculating about the rate increase. So this could have a positive impact on New Zealand dollar against the US dollar and also against some other currencies. So if you take a look on New Zealand dollar, I think that we have a very nice looking wave structure here, similar to Aussie, of course, a 3-wave drop that is now trying to bottom. So just be aware of potential more upside. In fact, you have this 5 waves down, maybe even double bottom here formation, which indicates that we could rally at least in 3 waves back to the former wave 4. But I'm very optimistic that if we go back to former wave 4, that we will see much more upside later. Not only here, we have also euro against New Zealand dollar looking quite good. Here definitely a downtrend, which is now just slowing down here for a bearish flag, in my opinion. From an Elliott wave perspective, I'm looking this as a wave 4. Okay, so notice that you have plenty of overlaps within this recovery. So it looks like that this is complex correction that sooner or later may bring a lot of weakness here. Of course, you want to see this swing low broken to confirm that we are finally headed lower. Now also if we look at the Euro Aussie, here we have a very nice reversal, very nice and strong downtrend that could continue, especially if we will be able to see a break out of this upward channel. We just recently slowed down after a retest of this trend line, which eventually may give way if we consider that we have here an overlapping recovery, maybe even in 3 waves still, with an ending diagonal placed in wave C. So you can imagine that if we get below 1.56 level, then this would mean that wave swing 4, that low of swing of this wave 4 will be broken. At the same time, you would have a broken trendline support, and this normally brings a lot of volatility to the downside. Traders, I really hope that you enjoyed this video. If you have any questions, please let me know below the video. Bye.